Welcome back. Now, crude oil prices rose today to extend gains from the previous session after official government data showed U.S. stockpiles had eased from record highs. Prices surged on Wednesday after a slew of market reports and official data offered some hope that a near 3-year global glut in oil is coming to an end, albeit more slowly than many have anticipated. Now, the market was also buoyed after the Federal Reserve raised interest rates in line with expectations, but did not signal any pickup in the pace of further rises. For more on this, let's bring in the head of research at Financial Derivatives Company here in Lagos, Damilola Akimbami. Good afternoon, Damilola. Thank you very much for joining us.
Good afternoon, Chimezi.
Now, what would the Fed's decision to raise interest rates mean for the global oil markets?
Well, there is an inverse relationship between a stronger dollar and dollar-denominated commodities. And with a higher interest rate environment in the U.S., what we expect to see is that the dollar will strengthen upon a gradual return of portfolio funds into the U.S. market. And because of that, we expect to see dollar-denominated commodities like oil, the prices of such commodities decline because of reduced demand. But so far, we're yet to see that, as at today, oil prices actually increased because of a decline in U.S. crude stockpiles. But bear in mind that the U.S. Fed plans to have at least 2 more rate hikes later this year, and when that happens, it's going to curb whatever increase in price we expect to see from the OPEC output cut deal.
Now let's look at Nigeria as a major oil exporter. What will this, major oil exporter and of course importer, what will this mean for us?
Well, Nigeria depends hugely on oil, and Nigeria needs oil prices to stay elevated above $50. And right now at 52, it's still all right for us because it's way above our benchmark of $42. And higher oil prices or receipts mean that our fiscal deficits will narrow. We will see sustained accretion in external reserves. The CBN will intervene more. But we also need to consider the output side, which is production. According to OPEC's February reports, Nigeria's production increased about 1.6 million barrels per day, and this was also confirmed by the Minister of State for Petroleum. So by and large, if we have an increase in production and oil prices stay around $52, $53 per barrel, it's good for Nigeria. And we expect to see that trickling even to our state allocation funds. So for instance, for March, we expect FAC to be shared to exceed what was shared in February, so to about 500 billion naira.
Now, talking about OPEC's report that Nigeria's production rose in February, that's about 3.7%. Does this pose a threat, to OPEC's production cut deal?
Well, right now, Nigeria is the 8th largest OPEC producer, as well as meticulous about 20,000 barrels per day. And Nigeria was also exempted from the OPEC deal. So even if Nigeria increases its production, it doesn't affect the deal in place. Now is the time for Nigeria to actually take advantage of the fact that we've been exempted and try and ramp up its production. So if we can move towards 2 million barrels per day and oil prices stay at least above $50 per barrel, then Nigeria actually would be able to bridge its fiscal deficits. Nigeria will be able to address its external imbalances. So for now, it doesn't. Nigeria increasing its production doesn't affect the OPEC deal.
All right. Now, looking at prices that, of course, have gained after data showed U.S. stockpile has declined, does that mean OPEC's reduction is actually reducing global gluts?
What we've seen, there's the OPEC production, there's U.S. shale. And because U.S. shale, this is the first time it will decline in about 9 months. And so, but they are still working on trying to bring down their cost. Their cost of production is way below Nigeria's cost of production. So, and they're trying to increase the efficiency gains. So what we've seen now, if it continues, then it's good news for OPEC that is trying to curb production and support prices. So on one hand, OPEC is trying to ensure that production is at a particular level by curbing it with its partners. So by and large, if we can have both a decline in U.S. shale production and OPEC meet its own, we expect to see a rebalancing in the market. But I won't bring out the dancing drums right now because I know that the U.S. will definitely try and ramp up their production.
All right, it has been a troubled week for oil prices, which dropped to below the $50 a barrel threshold for the first time this year. But some analysts say the cost of a barrel of oil could jump to as high as $60 by the end of this year if OPEC countries decide to extend their output cut agreement. Do you share the same view?
Well, we're not as bullish as they are. The $60 per barrel price of oil is quite bullish. We are actually more conservative, and we're anticipating within an average range of $55, $56 per barrel. You also need to understand that the market is still highly oversupplied. And like I mentioned earlier, the U.S. shale production is going to continue increasing. And the OPEC deal is based on compliance. Right now, what we're seeing is that non-OPEC partners, their compliance level fell to 42% in February from 49%. So if that compliance isn't there, we might see a break in the output deal, and that would affect prices. So we are not as optimistic as 60. I think 55, 56 average price is more realistic.
But do you even see OPEC extending that cut deal? Hello, Dami. Do you see
Yes,
OPEC extending that deal?
Well, they're going to have the meeting. There's going to be a five-nation committee meeting March 25th to review how successful the deal has been, and then another meeting in May to see whether they're going to extend it. I think what would be a major consideration of whether they're going to extend the output deal beyond June is whether, first of all, it's been successful so far, and whether the member countries, both OPEC and non-OPEC members like Russia, are willing to comply to it. And Saudi has said that it's not going to bear the burden of free riders indefinitely. So if non-OPEC members fail to increase their compliance level, it's going to be a challenge the sustainability of the deal beyond June.
Now, looking at the development in the global oil market, what does the outlook seem to be for Nigeria?
Well, based on what we've seen so far, and like I said earlier, that our projection is for $55, $56 per barrel as for oil price. If that is the case for oil prices, and Nigeria can ramp up its production levels to at least 2 million barrels per day, that is good news for Nigeria. We will to bridge our fiscal deficits. Our reserves are above $30 billion per barrel, so we expect to see that sustained increase. And obviously, exchange rates. Increased reserves mean that the CBN can intensify its intervention in the currency market. And so if we see that, if we see the Naira appreciate, we expect to see the import bill decline, and that would be good news for manufacturers who have a high import bill.
All right, thank you very much for your time, Damilola. That was Damilola Akimbami, the head of research at Financial Derivatives Company. And just before we go, Rwanda's economy grew by 5.9% last year, less than the 6.9% growth recorded in 2015. The Statistics Office says the expansion was driven by growth in the agriculture, industry and services, which all grew by between 4 and 7%. Services contributed 48% of the output, while farming accounted for a third. According to the National Institute of Statistics of Rwanda, agriculture share of GDP decreased from 33 to 30%, while the contribution of the industrial sector to GDP grew to 17% from 14% the previous year. And that's it on the program. Thank you very much for watching. I'm Chimezie Obiwago.